Hey there, traders. This is Christian from Tribeca Trade Group with your end of day recap. So, a little bit of volatility in the tech space today. You can see I've got S&P futures up, and we're basically back to flat in the after hours. So, just a matter of just more of what we've been seeing recently. A lot of rotation from sector to sector. It doesn't really look like a lot of money is being taken out of the market or put in. It just looks like money's going out of one thing and into the other. So it was pretty recognizable today that you could see that, plus there was a little bit of North Korea headlines, and anytime that happens, the higher beta areas will get hit. It's just a matter of how it works. Qs, it's funny because I talked about this pre-market, how there really wasn't a lot of support for the Qs. I send out a Monday morning global and index review pre-market on Mondays. And one thing I noticed was the Qs were starting the week below value. So, I didn't really capitalize on this. I didn't sell Qs. But I did notice that sometimes when we start the week, again, this is on the 1 hour chart in the Qs, when we start the week below value, we can often, trend that way. So we certainly got that today. The Qs did bounce back. I think they were down about 1.4%. You could see how oversold they were on the 1 hour. Always good to kind of take a look at that 1 hour bar and see how oversold you are. Normally, the indices, unless there's something super, super bad or super, super good going on, they usually don't stay. I think the RSI was on these, yeah, about an 18, 19. That's, anything, below 30 is oversold. So just tells you the kind of selling pressure that was taking place in that group today. So a lot of those higher beta segments really got beaten up pretty bad. And the other thing that I mentioned was there really isn't a lot of support. Usually when I put out that video and put out levels to watch, we broke into the value area pre-market, and there's not much to really get. There's consolidation in here, but there's nothing really until 141.61, which was a little bit scary. And again, I talked about that pre-market, and sure enough, we got a big down day there. So other groups, with the Qs just finishing down about 1%, there was other groups that really got smacked. The K-Web ETF, this is the Chinese internet. This has been one of the best performing groups, but when volatility comes into this market, and I was showing this chart earlier, which I guess I have lost it. But if you look at the Hang Seng, so this is a little hint that you could kind of look at pre-market, depending on what the Hang Seng does overnight. You could see that it was down 1.2%. If you if you track this with the Chinese internet names, you could see they have a very, very high correlation. And you could see the two of these matching up now. So, for a little while, the Chinese internets were outperforming the Hang Seng, but they're back in line now with a big move down. They were down 4% today, that group. So, what goes up sometimes can come down pretty quickly when it's very high beta. So down 4% for that group. Other groups besides the China internet names, the U.S. internet names, which is basically, if you look at FDN, this is the FANG proxy, traded a lot of volume today. And again, the biggest, why I call this my FANG proxy, which if you've listened to my videos before or been in the trading room, you know that I talk about this. The biggest weights in this ETF are Facebook, Google, Amazon, and Netflix. So it's a real good way to see how the FANG stocks are moving together, high beta. So they got crunched today, down 2%, but into some support. So support is right around this 99 handle, and it looks like we held it for the day above value. So some of these names like your Facebook and so forth, really got banged up pretty bad and broke support, down 4.5%. They were hanging out basically. Facebook, I should say, was hanging out like above value for the better of a month, and once it breaks support, that this can often take place. So, and look at the volume as well, confirming that move. So that was the nasty names, or the nasty areas of the market. Semis got hit pretty hard. Again, we talked about this last week too. Semis kind of provided a warning signal. Gap up last night, really strong, but a reversal bar, a hanging man type doji candle, and then a bearish engulfing candle. So that's an evening star, and it followed through past that last week. So really, was a good signal in terms of reversal coming in the semi group. Right when I think people on CNBC started to get positive on semis, of course, that's when it turns the other way. So good in a good contrarian indicator when CNBC, when they've got a couple analysts on after hours talking about how it's positive, that's usually your cue to take profits. It is what it is, guys. Sorry. Also, steel names got hit pretty hard today, but then you look on the flip side. Again, I always start with the negative. On the positive side, which is what we talked about in this weekend's newsletter, you've got the XLE, and if you have that dividend adjusted, I'm gonna take this out. Whoops, I don't need this. Let me just go to a different chart. It's gonna look screwed up. But if you look at XLE, I talked about this and was kind of anticipating this happening or the possibility of this happening. But you got the XLE above the 200-day moving average, first time since April. I tweeted this out around 10 o'clock this morning, and I was like, don't jinx it. I did buy XLE this morning. It was one of the first things that I bought. It had some strength right away, so it was able to hit two targets on this trade, going long XLE, and that's perfect. So basically, I took half off, and I want to stay long here. Again, it's had a huge run from 62 to 68, which is one of the only thing that kind of makes me a little bit worried is that it's already been on quite a run from the lows. So maybe it needs to back and fill. If that takes place, I'll put that those targets that I took today. I'll put those back on. But really strong. That was the best performing sector. Gold miners and gold also got a bid. I talked about that in the weekend newsletter. How there was a lot of gold that was being added on the weakness last week. So it looks like that worked for them. Gold was very well bid. Bonds were also very well bid, up 60 basis points, and then it was a lot of the defensive sectors. REITs looking at UTEs. Utilities were up 1%. The REITs were up. Consumer staples were up. So a lot of those defensive sectors that were a little bit weak, maybe about a week ago, really powered back. The other thing that I was watching, typically when we get some volatility, and the VIX, it is what it is, was all the way down to like a 9 handle this morning and towards the end of last week, just asking for something to kind of take it higher. And you could see how much it sold off. Now, really, there's a ton of instruments, ton of ETFs that track VIX instruments, or the VIX, but not the NASDAQ VIX, which is VXN. So, take a look at what happened here. This was at one point up 17%, and just a bigger move in volatility. So, a really high move in the Q's volatility. Again, not so much in the VIX. They did get back over 10, but again, just the S&P, with the S&P down, it says SPY's down 20 basis points, but really S&P futures are down in the single digits. It's just a matter of rotation that we got going on, and a little bit of volatility is going to cause those higher beta names to really get smacked. Tech might come back a little bit tomorrow because you look at what happened after hours today. Red Hat had results and looks pretty good. They were implying about a 7% move for Red Hat with the weekly options. So it looks like it's up about maybe a little bit less than that, 5-6%. There's another name that was also another tech name. I think it was SNX, was it? Yeah, SNX also some good earnings. So maybe you see a little bit of a bid back. In terms of option activity today, I'll bring up the kind of sheet for the day. For the most part, in the morning, it was just a lot of things other than tech. So if you're still looking at this group and momentum, I say this quite frequently, but being diversified really kind of helps you in this type of market, and noticing where, being able to kind of change your mind quickly and to adapt, which you could do faster than funds, right? You could do faster than hedge funds do. A lot of hedge funds have mandates. They've got big chunky positions on, but individual investors, that's your advantage. You can get into and out of positions very quickly. So We've been seeing a lot of calls in GE lately, some industrial names. GM, we saw repeat calls in this. So this is, believe it or not, is on a 52-week high in GM, and breaking out. And talk about the strength in the auto group, but there's really nice pockets of strength. It's just other than tech right now, as it's again, I'm saying the word of the day is rotation, but there was Ford calls as well. There was things like Whirlpool. A lot of the airlines were bought, both UAL and AAL, which those names have taken a breather for a while. There was some flow in some retail names as well. Lowe and Home Depot, those were really strong today. I think a lot of people took note of the Lowe's strength recently. It just got out of this, this was on the back of the hurricane, moved up, but really strong move in Lowe's. And I think Home Depot was up nicely too. Yeah, I mean, 52-week high in Home Depot. So again, expanding your horizons and looking at some other groups besides tech. It's really dangerous to have a lot of positions on a lot of the higher beta positions on without participating in some of the other sectors. So, I've been waiting for the energy for quite some time. I really wanted this to get above the 200-day moving average. So, I am late into this. I talked about XLE a lot in the newsletter this weekend, or energy, and some names are stronger than others, but it is what it is. This is I'll call this a Tribeca trade group setup, and I'm calling that because it's an easy setup. So you have your support of the 200-day moving average. If you want to try a long in here, you know where exactly where to get out. I mean, the only thing that you're really risking here is trade commission. If it happens to get below 74.50, you could say forget it with energy. But it's the first time it's done this since April. I'm in. I'm giving it a shot, and if it gets back below what, a 0.5%, I can get out for a small winner. Right? That's the name of the game. Is small losers and looking for something that might really start to trend here. So that's today's video. Have a great night, and I'll see you guys back bright and early tomorrow morning.